Walk with me onto a job site. It is 6 in the morning, the air is heavy with mist, the ground is frozen beneath your boots. We stand at the base of a huge retaining wall. 30 feet of concrete holds back thousands of tons of earth. To most people, this wall looks invincible. But I'm not looking for strength. I'm looking for the weak point. Do you see that faint line across the middle? Most people think it's just a scratch or a stain. To an engineer, it's a warning. The builder got scared. He stopped the trucks. The bottom layer hardened before the top was poured. That pause created a permanent defect called a cold joint. If lessons like this help you think differently about money, tap like and subscribe for the next briefing. To see why your retirement plan can fail, you need the chemistry of concrete. Concrete is not just mud drying, it is a live reaction. When cement meets water, a clock starts. Heat is released. Energy flows. On a tiny level, crystals grow and grab the sand and gravel, turning liquid into a solid wall. As long as the mix is wet, those crystals are active. But time is the enemy. Wait too long and they freeze in place. The surface becomes smooth and sealed. The chemistry dies, the clock stops. Anything poured on top no longer bonds. It just sits there. This is what happens to your money when you pause investing. You start in 2019. Every month, cash flows into your portfolio. The chemistry is working. Then 2010-20 hits. Markets crash. The news is loud and scary. You say, "I'll wait for the dust to settle," and you turn off the automatic transfer. In engineering terms, you shut down the trucks. You let the bottom layer cure. The old money and new money stop bonding. Later, when things feel safe again, you restart your contributions. On the statement, your balance still grows. But beneath the surface, it's like pressing fresh tape onto dusty old tape. It holds until real stress hits. That pause during the storm is your financial cold joint, a built-in fault line in your future. If this is already changing how you see your portfolio, hit like and subscribe so more people hear it. Two builders face the same storm. Builder A keeps the trucks running. He pours straight into the rain. Every new layer mixes with the last. The heat of the reaction burns off the water. He ends up with one solid piece. Builder B does what feels safer. He stops in the storm and waits for better weather. Months later, the sun is out. The market has already bounced. Now he feels safe and starts pouring again. But the bottom layer is cold. The new layer just sits on top. Both builders spent the same money. But Builder B's wall is weaker because he missed the heat. In markets, crashes and recoveries carry huge energy. If you only invest when it feels safe, you miss that energy. You buy comfort and sell strength. Here's the usual answer. I'll just sit in cash. Cash is safe. No. Cash is like bare steel left in the rain. It doesn't break in one day. It corrodes slowly and quietly. That corrosion is inflation. Day to day, you barely notice. Over years, prices rise and your money buys less. While your safe cash sits in the bank, it loses real strength. You didn't protect your wealth. You let it rust. You can't build a skyscraper on rusted beams. You can't build a retirement on weakened cash. Let me make this cold joint problem painfully clear with tiny numbers. Imagine two investors. Investor A keeps the pour going. Investor B pauses during the storm. Both plan to invest $100 every month for 3 years. The market crashes in year 2, then recovers in year 3. In year 1, both invest on schedule. Their walls look the same. In year 2, the market drops 30%. Prices are on sale. Investor A keeps buying $100 of bricks every month at the lower price. Investor B panics and hits pause. $0 go in for the whole year. In year 3, the market recovers by 40%. Prices jump back up. Both start investing again. At the end of 3 years, both have put in about the same amount of cash. But Investor A bought extra shares during the crash, when everything was cheap. Investor B skipped the cheapest year. Investor A's wall is taller and stronger. Investor B built a cold joint, same money, weaker structure. That is the cost of pausing your contributions. So, how do we build a wall that survives real stress? We need the continuous pour. And we need rebar. Concrete is strong when you push on it, but weak when you bend it. Steel bars inside the wall take that bending force. They don't replace the concrete, they reinforce it. In your portfolio, growth investments are the concrete. They give you size and long-term growth. Your income, dividends, bond interest, and other yields are the rebar. When markets crash and prices fall, the concrete cracks. But the rebar keeps paying. Cash flow keeps your wall standing. If you want more blueprints like this each week, remember to like the video and subscribe. Now it's time for inspection. Pick up your phone. Open your investment app. Scroll through your history. Find the gap. Find the month you got scared and turned off the automatic transfer. That gap is your cold joint. That is where you missed the heat. Admit it. There is a structural defect in your plan. Let me give you a quick mini stress test. Question 1. Do you have any gaps longer than 3 months where you stopped investing completely? If the answer is yes, mark that as a cold joint. Question 2. Is any part of your portfolio built from income, dividends, interest or yield, or is it all growth concrete with no rebar? Question 3. Are your contributions automated every month, or do you still rely on your mood and the news? Here is the fix. Stop relying on emotion. Start relying on systems. Automate your investments. Set the transfer. Do not touch it. The machine doesn't feel fear. It doesn't read headlines. It just keeps pouring. That is how you build a continuous pour portfolio. No gaps, no cold joints, and one structure built to survive a 30-year stress test. Download the checklist. Audit your wall. Turn the trucks back on. And if this briefing helped you, hit like, subscribe, and share it with someone whose wall is already starting to crack. I am the Yield Architect. See you at the next briefing. Class dismissed.